Welcome back to TechKidFX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording has lost a key area of support at around the $133.2 mark. We have also lost the 20-day MA here on the 4-hour chart, and at the time of this recording we are trying to battle out the key area of resistance at around the $133.2 mark. We have also continued to obey the Elliot structures, where we have fully maximized our target area to the lower side in the formation of this wave 4, and very soon I'm expecting an explosive move to the upside in the formation of this wave 5 to fully maximize our target areas. And before I give you the next moves that I'm expecting over here and also give you my next price targets in the formation of that wave 5, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to continue with the video here on the 4-hour chart by first giving you a quick recap of what has been happening, where you can see that Quant, after seeing the all-time high, we started the bear market, where we had been seeing lower prices in this ABC corrective structure, which took us back to around the $40.1 mark. And after seeing the bear market low, we started another bounce to the upside in a move that has been obeying the Elliot structures, where you can see that I have this Elliot structure in blue having the wave 5 making its peak at around the $229 mark, and also completing a larger Elliot wave count 1 to the upside. And after seeing the formation of a larger Elliot wave count 1, whatever we expected next is a corrective structure in the formation of a larger Elliot wave count 2, and in the formation of that wave 2 we also expected to see an ABC corrective structure play out, where we have seen this ABC corrective structure giving us a low at around the $94.4 mark, and also completing the formation of that larger Elliot wave count 2 to the lower side. And after seeing the formation of a larger Elliot wave count 2, whatever we expect on the long-term scenarios is a bounce to the upside in the formation of these larger Elliot wave count 3, and by first sketching out a minimum target area to the upside in the formation of that wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that lies at around the $399.1 mark. And that is the minimum that I'm expecting that larger Elliot wave count 3 to the upside to do. And because the wave 3 to the upside is an impulsive wave, we also expect to see a 5-wave structure in formation. And here on the charts, I believe we are seeing such a move where we can term that as the first wave to the upside. Then we have seen a corrective structure in the formation of that wave 2. We have also fully maximized our target areas to the upside in the formation of this wave 3, making our peak at around the $165.5 mark. And after seeing the peak for that wave 3, whatever we expected next is the corrective structure in the formation of this wave 4, and sketching out a minimum target area to the lower side in the formation of this wave 4 by connecting the Fibonacci's from the low of the second wave to the high of that wave 3. That gives me a minimum retracement area in the formation of that wave 4 between the fib level 0.382 and the fib level 0.5, which lies between the $141.5 mark and the $133.9 mark, which is a target area that we have fully maximized. And upon losing the fib level 0.5, that makes me to extend my target area now back to the fib level 0.618, so that the target area now lies between the $141.5 mark and the $126.3 mark, and that is the minimum that I'm expecting this fourth wave to do, or maybe say that it is within this red target area that I'm expecting to see the low for this fourth wave to the lower side. And yesterday we managed to lose a key area of support at around the $133.2 mark, and after losing that key area of support, we have now seen a low at around the $129.5 mark, and that could be the low for this fourth wave to the lower side right here. And that low is within this red target area that I have sketched out here on the charts, meaning there are chances that we might have seen the low for this fourth wave, and now I'm expecting a break above the key area of resistance at around the $133.2 mark, so that we can start this bounce to the upside in the formation of this wave 5 to fully maximize an even larger Elliot wave count 1 to the upside. And getting a little bit into the details of the moves that I'm expecting over here, once you see a break above the key area of resistance at around the $133.2 mark, I'll be expecting to see a retest of that key area of resistance. And once the retest is in and a success, Then I will expect Quant to also manage to break above the 20-day MA here on the 4-hour chart, which is now acting as resistance, so that we can see a bounce to the upside to get us back to the next key area of support, that is the key area of resistance at around the $147.9 mark. Once we manage to break above that key area of resistance also, I'll be expecting to see a retest before we continue pushing even higher. And for us to say that we are back in the formation of that wave 5, we also need to manage to break above the wave 3 high, which lies at around the $165.5 mark. And the moment we manage to break above those key areas of resistances and also the wave 3 high, then that will be enough confirmation that whatever we are seeing over here is a bounce to the upside in the formation of this wave 5, and sketching out a minimum target area to the upside in the formation of this wave 5 using a trend based Fibonacci, connecting it from the low of the first wave to the high of that wave 1, then dragging the fibs to the high of that wave 3. That gives me a minimum target area to the upside in the formation of that wave 5 at the fib level 1.618, and that is at around the $228.2 mark, and that is the minimum that I would be expecting that wave 5 to the upside to do, and it is within that target area, minimum target area, that I'll be expecting to see the high for that fifth wave to the upside. And we also need to be prepared for a worst case scenario that can play out here on the Quant chart in case we are unable to break above the key area of resistance at around the $133.2 mark. So in case we try to break above it, get rejected, then I'll be expecting a massive pullback over here. And in case we lose this red target area that I have over here in the formation of this wave 4 and continue pushing even lower, then I'll be watching the next key area of support at around the $110.9 mark. And this is what we can expect on the worst case scenario in case we get rejected at that key area of resistance at around the $133.2 mark. And at this key area of support at around the $110.9 mark, we can either find support and be able to regain, that is bounce back to the upside in a maybe in a different Elliot wave count here on the Quant chart. But upon losing this key area of support, then I'll be watching the $100.3 mark on the worst case scenario. But for me, in favor of this move to the upside. Soon I'm expecting Quant will be able to break above the key area of resistance at around the $133.2 mark, give us a retest, break above the 20-day MA, push even higher, break above the key area of resistance at around the $147.9 mark, and also manage to break above the wave 3 high for us to continue pushing higher to fully maximize our target areas in the formation of that wave 5. So that is what I'm expecting on the short-term scenarios and also on the long-term scenarios, and also taking a look at the indicators to see what movements will be supported. On the RSI, we are trading at around the 41 mark, meaning we have massive room for us to fully support the formation of that wave 5. Also taking a look at the MACD, we had been able to print a bearish cross which fully supported the formation of that fourth wave to the lower side, and at the moment you can see we are losing the momentum, that is the selling momentum here on the MACD, meaning soon we might be able to print a bullish cross to fully support higher prices in the formation of that wave 5. So let's be patient and see how that plays out, and I'll be keeping you updated.